Why is the most ambitious crypto project of the last decade crumbling before our eyes? The recent market trends tell a story that every crypto investor needs to understand. Our guest Tuur Demeester, an early Bitcoin investor and macro analyst, has been warning about Ethereum's fundamental flaws since its inception. In today's discussion, we'll examine three central points: why DeFi's complexity is a dangerous distraction, how Ethereum's constant narrative shifts have eroded trust, and Bitcoin's crucial role in fixing our broken financial system. Before we continue, if you enjoy these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. By the end of this video, you'll understand why the pursuit of technological complexity might be leading us down the wrong path. Let's start with how DeFi's elaborate systems might be missing the point of what cryptocurrency was meant to solve.
I'm very convicted in the idea that the whole DeFi meme is just a siren call. The actual signal is the Bitcoinization of finance, where you have, like we were describing, the massive debt problem, both on the public and private side of the market globally. And you essentially need to restructure the financial system with better collateral. And instead of creating these obscure, complex DeFi systems with bridges and different tokens and treasury management systems and DAOs and liquidity pools, whatever it may be, it's like just go left side of the bell curve, complete caveman, like, oh, no, maybe we just need to send Bitcoin the other way into the financial system and help recapitalize a woefully systemically fragile credit system.
This conversation cuts straight to the heart of our first argument: how DeFi's complexity is becoming a dangerous distraction. At 1031, I've witnessed countless investors become enamored with the intricate world of decentralized finance, its bridges, liquidity pools, and complex token systems, but they're missing something crucial. The global financial system is buckling under massive debt, both public and private. What we need isn't more complexity layered on top of an already fragile system. We need fundamental restructuring with sound money at its core. This is where Bitcoin's simplicity becomes its strength. Instead of creating elaborate financial instruments that few understand and even fewer can safely use, Bitcoin offers a straightforward solution: sound digital money that can help recapitalize and strengthen our financial infrastructure. Think of it like rebuilding a house. You don't start by installing smart home technology when the foundation is crumbling. You fix the foundation first. That's Bitcoin's role, providing a solid foundation for rebuilding our financial system. We've just seen how DeFi's complexity distracts from the real solution, but what's coming next reveals an even deeper problem: how Ethereum's constant narrative shifts have eroded trust in the entire project. And trust me, you'll want to stick around for our final revelation about why all of this matters more than ever in today's financial landscape.
Ethereum delenda est. Ethereum must be destroyed. I mean, it's not that project, but the idea of, a grift where you can have a new narrative every year and a new story to pump your bags, and you keep lying. Like the lies, they've been lying for 10 years. And the market is showing that the market is sick of it. It's losing against Bitcoin big time. The secular trend has been broken for 1 year now against Bitcoin. It's over. I really think it's over.
This section powerfully illustrates our second key argument about Ethereum's credibility crisis. Tuur's observation about new narratives every year cuts to the core of Ethereum's fundamental problem: its identity crisis. What started as a world computer morphed into an ICO platform, then pivoted to DeFi, then NFTs, never fully delivering on any of these promises. This constant shape-shifting isn't innovation, it's a red flag. Compare this to Bitcoin's unwavering focus, being sound money in a digital age. It's never tried to be anything else, never needed to reinvent itself.
Sup freaks, this rip of TFTC was brought to you by our good friends at BitKey. BitKey makes Bitcoin easy to use and hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a BitKey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20.
The market is starting to recognize this difference. That's what Tuur means by the secular trend has been broken. Investors are beginning to see through the complexity and returning to fundamentals. It's like watching a trend in fashion. Eventually, people tire of the flashy and return to the classic. In this case, the market is returning to Bitcoin's simple but powerful proposition. We've now seen how DeFi's complexity distracts from real solutions and how Ethereum's shifting narratives have destroyed trust. But our final segment reveals perhaps the most crucial point: why a fundamentally flawed foundation can never support the future of finance, and why this matters for every investor in the space.
It's also like cart before the horse. It's like, well, you need something solid. You need bedrock before you can build on it. It's like, oh yeah, but we have this amazing structure, and you're like, okay, where did you build it? It's like, oh yeah, out there in the swamp. It's like, all right, well, it's gonna sink eventually, unless you do like Venice and you figure out how to build in the swamp. But I don't think Ethereum has done that at all.
No.
They've hard forked 17 times. Like that, and to me, that's enough.
Yeah.
To be like, it's a non-starter.
Yeah.
17 hard forks.
This final segment crystallizes our third crucial argument about the fundamental importance of a solid foundation in rebuilding our financial system. Tuur's analogy about building on swampland versus bedrock perfectly illustrates why Ethereum's approach is fundamentally flawed. The revelation that Ethereum has undergone 17 hard forks is more than just a technical detail. It's a glaring warning sign about the system's stability. To put this in perspective, imagine if the foundation of your house needed to be completely rebuilt 17 times. You'd rightfully question the entire architectural design. Each hard fork isn't just an upgrade. It's an admission that the previous version had fundamental flaws that needed fixing. This constant need for foundational changes demonstrates that the initial architecture wasn't properly conceived. This brings us back to our central thesis about Bitcoin's role in recapitalizing the financial system. Bitcoin has maintained its core protocol with minimal changes because it was built on solid principles from the start. It's like the difference between building a skyscraper on bedrock versus trying to construct one on a floating platform. You might be able to make the floating platform work with enough engineering and constant adjustments, but it's inherently unstable and ultimately unsuitable for supporting critical infrastructure. This is why Bitcoin, with its proven stability and unchanging core principles, is uniquely positioned to serve as the foundation for rebuilding our financial system. The complexity and instability of Ethereum's foundation make it fundamentally unsuitable for this crucial role. Instead of trying to fix a flawed design through endless updates and changes, we should be building on Bitcoin's proven, stable foundation, the only digital asset that's truly demonstrated the reliability and immutability needed to support the future of finance. Do you think Ethereum's complexity will be its downfall? Let me know in the comments. I read every single one. And if you found this breakdown of DeFi's fundamental flaws interesting, you'll want to watch our analysis of Bitcoin's developer-driven future. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching.